Hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. Hope you're having a good day. Good day in the markets. There's a little bit of volatility out there for sure. Want to take a look at some scenarios within the markets today, particularly looking at sectors. I wanted to break down sectors specifically, see what's moving in those sectors. There are some areas that haven't been moving for a while that are actually moving now. And sometimes you'll get that, especially when, let's say, you get a pullback in the markets after, let's say, some of the technology stocks or whatever the case might be. Sometimes small cap stocks start to go down. You do get rotations. So I do want to take a look into that area today. And some of these are winding up, setting up for potential spring type action moving forward. So let's take a look at what we've got there. But I wanted to welcome you all to our discussion today. Definitely recognizing a lot of the names here. Hello to you, Ray, and others. Great to have you all on board. Folks, any questions, comments you have, those in the chat so we can address those for you. And we'll dive on into that. I'm joined in the chat by Mr. Cameron May, friend of mine, and has posted our handles, our X handles on X listed right there. You can follow me, Mike Fairborn CS, Cameron May CS. You can follow other coaches there as well with their name, CS at the end. All right, well, with that, let's dive on into some disclosures to get going here. The information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk. They're not suitable for all investors. Specific securities used to demonstrate analysis and trading functionality were randomly selected randomly. We went through and we'll talk about some of our scenarios in just a second here. Wanted to state though that spread trading must be done in a margin account. Multiple leg options strategies do involve multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM option has a higher risk of being assigned early. Now, a short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application is for education purposes only. Investing does involve risk, including the loss of principal and finally, past performance is no guarantee of future results. Now, it also states, too, there is no guarantee that execution of a stop order will be at or near the stop price. Stop order will be at or near the stop price. Okay, there's no guarantee of that. Quick review of where we're at. For those of you joining us for the first time, great to have you all on board. Of course, do recognize a number of you. Great to have you back, folks. Just a quick overview in our discussion here. By the way, I wanted to thank Brent Moores, I believe, who covered for me last week. I believe it was Brent. Appreciate that. Getting back, though, to our discussion, our normal discussion, we talk about swing trading. Within swing trading, a lot of times we are looking at specific price patterns. We've talked about a number of those price patterns. We put some trades on price patterns previously that are outside of the bull flag price pattern itself, but this is really a common one that tends to highlight for us really what we're looking at within swing trading, which is really a trend move, trading in the direction of the trend, that is, higher highs and higher lows, which you do see on this chart here, a pullback to a higher low, which we believe to be a higher low. This is, of course, a higher high. The trend is up. And then what we're looking for is a specific time frame. It is a short-term time frame, designated here specifically as short-term, days to weeks to form, and it's really just the follow-through breakout. In this case, talking about the bull flag again up here, the bull flag, we're looking at a follow-through in terms of a time frame of really 3 to 10 days and sometimes 14 days, but really, you get a general sense. When we say weeks to form, we're looking at 10 market days. Obviously, 10 market days would be 2 weeks we'd be looking at here, but that's just the follow through. And so we're really looking to try to put a lot of pieces together. We want the strength of the trend. We think that's important, right? A lot of traders do like that. I mean, when I say we, collectively traders will do that. So investors as well. They like to get the trend on their side, but then also with that, they like to get the breakout. They like to see a breakout, and they're really trying to get timing down. Now, we will look at stocks. We're going to look at some options today on some of these scenarios, but I want to take a look at the markets first initially. Before I do that, though, I'm gonna just switch a transition into an area I thought I'd bring up, folks. I hope you are enjoying the change of seasons. It's been an early switch to spring. I want to say it's spring. I was out biking yesterday, and it was the warmest day of the year. And it was great because normally we're looking at about a lot of snow through here, just a ton and ton of snow. We didn't get snow. We got 60-degree weather. Folks, you can see there is no snow. But we do have deer that come out. These deer have seen me so much they're not even afraid of me. I think they recognize me. But they camouflage so well, and hope you're having a good spring season. We're getting early spring season here, but I thought I'd throw that out there to you. Normally, we are covered with snow, but it has been a great, great year. It's fascinating though because we are actually our mountains are at 100%. I did take a look at in terms of snowfall, but down in the valley, we've been very, very fortunate this year not to have to, slog through it. In other words, you can do everything you want in the mountains in terms of skiing, and the lower mountains, I've just been mountain biking. So it's been really great. It's just a quick note though. Yeah, that was my Twitter handle. Feel free to follow myself and Cam. Cam, definitely, if you can throw your handle into the chat box as well. I'm just going to throw mine down in here. Love to have you guys on board there if you are in fact interested. Let's do this. Let's move over to markets. Okay, no more spring videos or visuals. We're going to jump right into a market discussion here. Take a look at a few things. Break this down. So we had been talking about the S&P 500 really kind of tempting higher levels in terms of a possible breakout. Well, you can see over here, we've been tapping into the trend for quite some time. And in this class too, the trend had been decidedly higher within the S&P 500, higher highs, higher lows. In fact, here we are all the way down here at this low. This was an all-time high right there that we had just a few days ago. So the market has been kind of concealing itself, at least in terms of this pullback. We'll see what this materializes into. But anytime I do see deer, sometimes I will be thinking, oh, it's kind of conceals itself. The market, there's good camouflage. All-time high, the next thing you know, bam, here you are dipping down pretty sharply. Now, things did look worse earlier today. You can see that was a pretty good candle coming back. But if there is a rotation in here with the pullback in the market, sometimes other sectors will do strong. In other words, when the market begins to dip, we do see other sectors really, really showing some strength, and they have been recently. One of those, and we're going to take a look at it here, has been healthcare. You guys, we looked at this a little while ago, a bounce off support. We did not take a trade in it, but that was the bounce off support here for Johnson & Johnson. You remember it was about 2 or 3 weeks, no, it was about 3 weeks ago that we talked about the TTM squeeze. And this is one of those guys that did have our TTM right in here, the TTM squeeze. And we were just saying, gosh, we got a good bounce after earnings. Actually, it dipped after earnings, but it followed through really nicely. And my gosh, it's just been going strong ever since. A lot of times when you get that volatility compression, particularly around earnings, sometimes it's really strange. You do get these liftoffs. And by the way, these can be interesting time frames for bounces that might occur in a swing trade time frame. Let's do this over here too. Let's go right over here. Do you guys remember this discussion we had? Look over here with me. See how we got the TTM squeeze that came in right in there. It denoted as red. Right through that range, a compression, and bam, a really nice follow through. We were actually referencing number one over here for the possibility at the time for a number two rally, and it did come through, and we said, hey, maybe there's some resistance up top here. Now, obviously, at this point in time, I gotta say, we missed that move, but look what we're focused in on here. Healthcare. Healthcare's had a bounce. We've had some discussions on healthcare. I'm gonna go to my sector grid right now. We'll just go full screen on this and see what we've got. All right, and let's do this. I'm gonna go ahead and find that because that was a script, excuse me, not a script. It was a class that we had, and there might be some questions on that TTM squeeze, but just a quick note on that. What you can do, folks, and this is a great time, just as a quick note, we'll move past it quickly here, but do encourage you to subscribe if you are interested in the Trader Talks channel. Here is our channel right there. And I just threw that, there I go, got to click it again, into the chat box so you've got it. Now, if you want to take a look at the playlist for this specific class, I always go Control F. There's so many in here, and they always get rearranged. But there is swing. If I can just find swing. Oh, man, where are you? It highlights it, but right there. And so here's the playlist here. I'm going to show you the ah, where was it? It was over. I think we talked about it in this class here, if I'm not mistaken. We might have gone through it. I know we did. We broke down specifically the details of it in the ThinkScript class, but I'm just going to throw that in here so you have it. But this was for the TTM squeeze. I mean, you can find the playlist in here because I am going to tap into that a little bit today. We've been seeing some interesting moves after that squeeze has taken place. Now, there was a question in here from George. Where is your TTM squeeze histogram? I'm not using it right now, George. I'm just using it when the Keltner channels and we get that compression when we get those going in within those Bollinger Bands and then that time frame there. But I did take those out. I just want to get that little view down below. Just make it nice and simple there for now for a class. All right. Well, let's take a look at our sectors and see what's going on with our sectors over here. As you take a look at our sectors, you can really see that we've been, we had really shown some strength. I mean, Infotech was really, really strong. In fact, there were different times in here where we were really looking to possibly break out higher. We did dip. We came close to that same resistance level again. We pulled back, right? And we saw a little bit of a dip. Now, communication services had been very strong off of a flag pattern and it looked good, but then, we're getting lower lows and lower highs over here. And what will tend to happen, and we've been talking about this too a little bit, is there can be a transition from what has been working in terms of growth, and it might go into value or income, like income stocks, those companies that pay dividends. Although dividend stocks aren't guaranteed to continue to pay dividends, we're just talking about dividend stocks, as well. There's no guarantee of that, but you'll find a fair amount of those in consumer staples, and you'll find a fair amount of these in healthcare. Do you see, folks? I'm going to step back and just let you look at this. Do you see the rotation in those two key areas as we look at it? Look at some of these that have been breaking lower, S&P 500 lower. Now look at recent trends. Now think about getting something like a sector on our side where the sector is in turn showing strength, and why not build on that, particularly if a sector is moving higher. A lot of times you have to have fundamentals behind the scenes. So the fundamentals, putting the fun in fundamentals to get a whole sector to go up, a lot of times those fundamentals are positive, or at least perceived to be positive in the market. Okay, there might be some growth. So you could just get general rotation too. You might have seen valuation play a role. In other words, the tech companies, the financials, whatever the case might be, we're looking over here at communication services. They've been going up for a while, but staples and healthcare had been flagging longer term. In fact, that's a 3-month. Let me go to I just maximize this is all I've done in here. Let's go into a 1 year, and you can see how long this consolidation had really been. I mean, this was September right there. September of last year. Consolidation, tested it, dipped all the way back down, and then there's your rally. There's your follow through. Now, if I step back even further and I just say, okay, do we see the possibility of a flag pattern here? Yeah, and we could be resuming a longer term trend. Now, right now for staples have really gotten way up there. I mean, and they might be ready to pull back, question mark. We don't know if that'll happen or not, but they could. They could pull back from here. Let's go into healthcare, just one to the right. And now this goes back. Oh, let's go back to a 1 year on this as well. And I'll just kind of show you where we're at. Now, this was interesting. And we talked about this trend line break in here. And the reason, again, why we're going through this is although I know we're looking at big picture timeframes, we're looking at the sector, just one notch below the market, right? The next biggest classification, you got market, you got sector, industry, and finally company or stocks. We're working our way down to that level. But look what we're seeing over here in terms of sectors. Trend line break, my jagged trend line. But you can see up top here, we did clear some highs, and there's your pullback. Is anybody seeing the bull flag there? Bull flag, possibly, question mark higher. Now, This has already bounced and we've come up to this level here, which is interesting. We're going to tap into this concept in just a second, because what we could be seeing here is resistance possibly at these levels. It's not our first time to this point. In fact, over here, I'll just label it resistance, resistance, resistance. And we have to say we're at resistance again, at least on a historical basis. That's clearly resistance where we're at right now. Now, the question is are we going to break through? Are we going to pull back? We have a number of stocks that might be just down in this area. We're seeing possible strength in the sector in terms of just the chart, and we said that could tie into fundamentals. But where are the stocks that might be showing the possibility of a bounce? I showed you J&J. J&J was an early one. It just ran up, right, through basically this whole range. But a lot of the stocks, and this is what's interesting when you look at sectors, they might look materially similar to the sector. This is where they're at. So collectively, we've got about 61 stocks in healthcare that make up this chart, that are within the S&P 500, because that's what we're in over here. That is the S&P 500 right there, as you can see up top. And I've just tapped into that right now. So that's what I wanted to do. And I wanted to actually tap in to that squeeze still, because as you recall, when we were coming back, and I actually want to show this too, right back to where we were on our bull flag and this visual that we've got. This time frame, what that TTM squeeze will do is it just looks over a compression at statistically low levels where price action just gets really, really weak through here. And sometimes that's at the flag portion of the bull flag itself. And then what happens is it gets tighter and tighter in there. And sometimes what will happen is it will break in the direction of the trend. And that's what a lot of technicians are really looking for. They're anticipating that. These traders are looking for a move in that similar direction. Okay, so let's go ahead and dive into that. Before I do, though, I wanted to lay that all up. I did want to set that up because we are talking today about also some of our other scenarios. In fact, other setups. This is one of the companies I want to look at. This is CAH, but before we dive into this, it's been a couple of weeks since I've been on here, and what I wanted to do was talk about just some of the existing positions that we were looking at and had. This one's still going. So VZ, which was different, this one started off with a inverted head and shoulder. You can see it pretty clearly over here. Shoulder, head, shoulder, right at this breakout point right there. It was at a 6.60 dividend yield. So that was attractive on a couple of different fronts, maybe to a couple of different individuals. But this is not healthcare, but we're just reviewing what we've got, we'd looked at previously in our portfolio, and what we talked about when we reach a target one, the T1 level, prior high, we're then anticipating a T2. And when this comes to a T2, a lot of times we look for a longer or a moving average that might kind of keep up to pace, but kind of lag behind price action for potential exit levels. Now let's go ahead and throw on our standard moving averages that, yes, we have saved right there. There we go. We'll just show you where this is at. This is actually an exponential, and you can see how well it's just held that range. And so for the possibility of an exit, it could be right there. I'm just going to put, a price break below that line. That's an exit. We could look at an exit in that level. Some people could be doing that. Now, the other side of this is the target. There's your low, there's your high. That's the break through the neckline on an inverted head and shoulders pattern. We take this level right there in price, and I'm just gonna, there's better ways to do this, but look right there. You see how close we are to our target right now? So what some traders could do is they could take some off at the target, but they could also do half off. They could take the other half off. They could let it potentially run and then cut that out if it breaks. Whatever remains, take out if you close below or trade below the 10-period exponential moving average. A key point that I have to note, though, is we are coming into an area where there is, in fact, Boy, there is resistance through here. You can see it right there. I'll put lines up here. Resistance, resistance, and in fact, I don't know. Is that resistance through there? Maybe so. I'm going to go ahead and just draw this so you can actually see if we get more exact on our price projection levels. In fact, here is the Fibonacci levels. I'm going to draw it off the bottom here and pull this to the right. We go to the top to the bottom. I click on it right there. And there's my 100% range. And so at that 100%, I can click it again. And our 100% is right there. You see how close we are? So there's 100. And that's our red line for 100. And that's really just the price target for an inverted head and shoulders pattern. Now, some traders, I should say some investors, could be looking at this as actually an entry point for a longer term position that they want to hold longer term. And why is that? Because we said it did have a dividend yield of 6.60. It's not too shabby, to be honest with you. I mean, all else equal, that's not a really bad sort of a yield relative to even where Verizon's been in the past. Where you look at a lot of the companies in the S&P 500, maybe 2.5 to 3. So just to say, this is a swing trade class, but sometimes investors will use swing trade entries for longer term positions. Okay. Here is a weekly chart on that, just so you know. Are we just, I mean, if it goes all the way back up to where it was, I mean, Verizon had a pretty big dip, but now it just gives you a little bit of perspective there as well. All right. By the way, as I did say previously, though, just because a company does pay dividends does not mean that they're going to continue to pay dividends in the future, right? They could be cut. But this one, I think, has been having one for quite some time. Now, I'm going to dive into this. DXCM, there you are, DXCM, Dexcom. We did a trade on Dexcom, and the Dexcom trade was, it was a short put vertical. And we looked at this one, and basically we sold the 80, and we bought the 75. And that's our position over here. We did that, a couple of contracts. We did that on the 30th of January. And you can see one of the reasons why we did that is we didn't see, we talked about in this class, is we said we didn't see a lot of strength in here, but it was right around here we did it. We didn't see a ton of strength. So we were looking maybe as a way to generate income, but still using possible bull flag. This was actually a run up, and we were going sideways, and we were with the possibility of maybe going higher. And we said, gosh, there was a giant gap over here. A giant gap. It's so big I can draw a gap in it. But if we said we thought that it might, or it could, follow just the same very mild trajectory. Geez, it's even lower than that. Look at the trajectory over here. This is really kind of fun, because then you could do projections into the future in terms of your diagonal lines. But look at this over here. If I just draw kind of like a median line, look how slow that's moving. A very, very slow mover. I just kind of give you a general idea. But we said, hey, why not try to collect over here some income on this? And we did do it ahead of earnings too, though. We talked about this. But we said, hey, let's just, earnings had been okay through here after this big dip. And let's just see if there's anything we could gather. Well, we did, and it's still going. In fact, there's still about 55 cents left here. Remember, on these spread trades, you'll basically you sell the higher, you buy the lower. It's going to show that this is just a paper money trade right here. It's up 356 and it's down 216. But remember that if you do it in a spread format, it can really lower the cost basis. We'll go through that again because I've got a couple to look at. But anyhow, that's where we're at on this one. Just kind of watching it right now as that trade. We really didn't, we haven't really broken lower. It's just been kind of holding in the same range in here. So that's one that we've got there. Now, one that did break down was Qualcomm. Now, we only put, quite a few companies have broken down. This was in technology. Remember, it's a semiconductor we're talking about here. But we looked at Qualcomm, and that was after earnings. It was right in here that we got into that trade. But it was not actually up to the T1 level yet. And we say when we're not up to T1, T1, the target 1 at the prior highs of the pull of the flag. Then a lot of times we're just looking for trade below the low of the high bar, which was actually right there. So we're out of this trade quite early. And I think we talked about this, but there has been a precedent. A lot of times when you are trying to break out of resistance, take your high bar. If you close below that high bar or trade below the high bar, that could be a possible exit. Okay, exit. And we can go through a number of these points. Technically that was a high bar there. Did you trade below that low? You opened lower. Absolutely. How about this high bar? Did you trade below? You did. High bar, you traded below. High bar, you traded below the low of that bar. Okay, so there's a number of these that we can look at there. That's kind of what we've been doing, but we did get knocked out of this trade, and it was a little bit risky in a sense that we had not broke out of resistance. I remember we talked about that. Although it did respond after earnings and was starting to go higher, well, it collapsed with the market, right? This was a market kind of a decline, and we had seen with some of the technology stocks, they dipped too. All right. So let's do this. Let me take a quick look and just see how we're doing in the chat area. Looks like Cam has got us going here. Let's see. If the MA is moving, how do you monitor it? Just review daily. That is right. You can just review that daily, Vince. That's something to keep an eye on. Particularly, a lot of times on these shorter term time frames, you have to keep pretty good eyes on it. A lot of times, if you're breaking out, even on the S&P 500, some of the stronger moves out of a bull flag that we kind of talked about right there, Vince and everybody. See that flag right there? Look how well we did not close below that line. We didn't close. We closed right there. So even on the markets, but you got to keep an eye on it too, right, to do that. I'm going to go ahead and right click on that line. And no, there are ways where we can put alerts on those levels as well for like a moving average alert. I can't in my demo account, but I think in the live accounts that could be something that could be done too to notify you or get you text on something like that. All right, folks. Let me just pause for a second. Yeah, folks, if you like this kind of content, what we're discussing here, definitely would really appreciate it if you smash that like button. Lets me know that this is informative type information and you're finding it useful. Appreciate that. Be sure to subscribe to bottom right-hand corner of the screen if you want to click that. All right, let's dive into our topic of discussion today. We talked about, first of all, healthcare, specifically the healthcare area. We saw on our sector grid, healthcare was really, starting to maybe come out of this flag pattern. And lo and behold, there are a few companies within that group, in the S&P 500 that is, that have been kind of mirroring a little bit of that sort of a move. And let's take a look at CAH first, since it just popped up for us here. I'm going to keep the money flow. Let me just show you the money flow has been very strong. Remember this indicator tries to net out buyers relative to sellers. It's been really quite strong. In fact, it broke out way early over here in this range. We took out some highs. In fact, we took out these highs all the way down here. Started to break higher. Money flow led, and a lot of times prices, I should say volume indicators can lead price. This had been quite strong. The trend, in other words, the trend, drawing it right through here, has been up. Higher highs and higher lows, but more recently a pause. Let's go ahead and put in, as I clear this out, let's put in a TTM squeeze. And yeah, I think George said, you can keep this main squeeze on. And let's take out a couple of these here, just so we can see the squeeze for now. But there you go. There is the histogram in there. And now you can look at the histogram. It's useful. I'm just looking at the middle line when we are getting that statistical low between the interaction of the Kiltner channel and the Bollinger Band right there. And you'll notice. And so what I'm going to do is just take this off. Just the histogram itself. And we should be good to go right there. Okay, so look what's happening. We've got contraction occurring. And we talked about how that contraction can occur. And all we're talking about here is that the bars themselves and the range, when we're talking about ATRs, we're talking about standard deviations of this normal range of move that the stock has been having with the bars themselves, they get tighter and tighter and more compressed. And actually, can you guys see the flag pattern here? Again, we're in the healthcare group. That's actually Cardinal Health that we're looking at, a company in the S&P 500. But can you see it kind of tightening up and winding up a little bit? Sometimes they'll say it's getting wound up. The spring is getting wound up. Well, we're getting an interesting verification that we saw down. Well, I should say not verification. I should say confirmation from a squeeze. Now, no indicator is perfect, but we can say that it's trading at a statistical low volatility range is what this can help us to understand. It's also happening at that portion of the move. Now, this move, though, is a little bit different from just your standard flag pattern. Does anybody recognize, anybody tell me what this is right there? Just the flag portion. Because there is actually a pattern that's occurring there. What are you guys seeing on that? By the way, thank you, Paul. Yep, there's an alert on that study for a moving average in there. Back to Vince's initial point. You guys see this pattern? Let me draw it this way. A, B, C, D, E. Triangle, says Ted. Yep. And by the way, Ocean Life, pennant or wedge, a lot of those pennants they form like a triangle. And it's funny because the triangle itself is winding up kind of like the spring. And I keep saying spring because a lot of times that's kind of the move you'll get after. By the way, this move from the TTM squeeze can be up or down. It doesn't have to just be up, but a lot of times we're looking at it in the direction of the trend and also the strength of the sectors, which is what we did see. We saw strength in consumer staples, which is a little bit ahead of it. But this one's kind of flagging. So interesting, right? You guys saw the flag pattern in the healthcare group. Now you're seeing it perhaps in a stock within healthcare with the squeeze, and we're winding up right there. Now, traditionally, the pennant might just be like one of these and get ready to go. You know, these are noted for the higher lows and the lower highs. You have to have that for this to coil up. Okay, that's what we're looking for the coil itself. Now, having said that, a triangle pattern is oftentimes an A, B, C, D, E. We don't know if we're going to get the E, but that's like technical terms. I'm talking like sort of these old school, price pattern followers that didn't have these technical indicators, back in the 20s and 30s. That was kind of and you can still see this quite frequently on a pattern, on a consolidation. So will we get the E in there? We don't know, and we have yet to break out. We're still coiling. But just like we saw back here on DXCM, which by the way, is also still coiling. Notice this coil right down through here, sideways, boom, we took off in the direction of the trend. This is where we last time sold a short put vertical. I was thinking maybe we could do the same thing since this sector is still showing strength over here in our paper money trade and just do some options on this one. Don't worry, I've got a stock lined up for our next trade here. But let's go ahead and look at this right now as a short put vertical. And that again, we are selling the lower, selling that put, and selling the higher, buying the lower. Right? That's what we're doing here on this. And we're trying to just see if the price of the stock can hold above our short put, where we're selling puts, relative to buying puts, all the same, contract month. We'll just do it, over a shorter term time frame, like a month out or whatever. Because there are no earnings over here either. But we're just looking in this case to generate potential income if the price of the stock can hold above that 125 by expiration, which is the anticipation here. Okay. All right. And by the way, as we do this, some traders might say, well, fine, Mike, we put a short put vertical on here, but if it starts to break out of the triangle, then we might be looking for a strong move because that's actually a really big pull of the flag. Whether I put in here for P for pull or P for price, that would be the extended move in terms of this price range going forward into the future. So it's not to say that our hands are tied and we can't put on a stock trade too, but I'm just saying at this point we don't have the signal, but it could be an interesting way, kind of like DXCM was to generate that income. So let's look over here at a range. And a lot of times, this is potential support level, but let's just say it's below 120. What do we have below the 125 range in here? You're going to notice with these companies, particularly in the S&P 500, a lot of times if you're going to get some good volume over here, it can really help, and also good open interest here. It can help with the spreads over here between the bid and ask. And I'm just going with the monthly contract over here for March. Let's narrow this down. I got 50. That's plenty. We're going to go down to 20. There we go. So here's our 25 right there. And you can see we could do a spread through here. That's a very, very, that's a dime wide between these two. So 125, if we sold here, and maybe we could even, that's kind of like right at support. It's a little bit higher because we're trying to generate some income off this, but then maybe we could buy a 123 or a 124 and just observe what this looks like on that front. So here is our 180, 180 on the bid. So we're going to click on the bid. Just went to 185. I'm going to hold the control button down on the keyboard, and I'm going to go to the 123, for example. How much can we gather there? Say, Mike, it's only 55. It's only 55. Now, some people might just look to sell a put by itself. Let me just show you the difference between the two. If you were just selling the put, and remember, if you go below the strike price by expiration, it's very, very likely that you're going to be assigned shares of stock. And that's going to be true anytime you're selling a contract. It's just that on the short put vertical, we're buying that lower strike in case the stock were to drop dramatically or something. We're not going to be losing below the 123 in terms of a max loss. And I can show you that on the dialog box in just a second here. But the 125 to capture that 190, wow, that went up a little bit. So here's the 190 right there. You can see that the buying power effect is about real close to $2,300. The max loss is $12,310, and your credit's 190. Well, if I were to narrow this down and we just say, okay, let's just go to 123. I'm going to hold the control button down. 57-cent credit there. Look at the buying power effect now. It's $145. Now that's quite a difference from the just about 2,300. Now, granted, and by the way, look at the max loss. 145. The cost of the trade is $55, and we talked about multiple contracts, going to create multiple commissions as well. So you want to be mindful of that. But if I were to try to get closer to that 190, just by, what we had with the selling the put at 125 by itself, what if I went a couple of contracts? What does our max loss look like now? 435. Now that's a lot better than the 12,000 and change. The buying power effect is 435, a lot better. In terms of lower, it's lower than the 2,300. And there is your cost of trade, including commissions, although this does not list commissions. So just be mindful of that. You don't want to check commissions, but 165, according to what we're seeing here, that's pretty close to the 190 level. But yet these numbers, particularly, that max loss is way different, right? And so too is the buying power effect. Anyways, let's put it on. Doing a lot of talking, but there's a lot to say on these. I just put it on right now. It might have been a little bit higher when I filled it, but anyways, it's going back. There you go. And remember, the goal here is for these values to dip in price. Prices compress, go lower over time, which is what we would see with time decay. The time decay daily is about 6 cents. All right, so the whole goal is just to, idea from a trader's perspective is have it hold above the 125 through the expiration date. All right, SYK, we're not moving yet out of this group. Here is SYK. Now I'm going to just let you guys spot this for a second. Do you see anything over here that might look like a price pattern as to where we're at right now? And by the way, A lot of these healthcare companies are already past earnings. They're past earnings. Earnings is gonzo, right? We're past it, which is a positive. We don't have it for a while. We talked about the dangers of earnings, but folks, that is a high over this point, and that's a higher low. And by the way, we have another higher low right there. And by the way, we're very, very close to getting above this level. In terms of actually, technically, if we focus in on it, that's your low of the pullback range. And so a close above the high of the low day or a hold would be above that level. We got another one now. That was a little bit of a fake out, but we did still get a higher low right there. But right here, take a look at that. You got that's a hold right there. And now it's a little bit of a follow through. So we're not in the position like we were on Cardinal Health. We can actually look at maybe stock here, but it's a very, very expensive stock in this case. And so you just need to be mindful of that. I'm going to cut the price down to 50 shares. And so 50 shares as opposed to just our standard 100 that we'll a lot of times put on. But of course, there can be some other ways to use options here as well. We're looking at 50 and the possibility of us, let's see what happens at a T1 target. Remember, if we trade below the low of the prior day, a lot of times we'll just take that trade off because we're still just getting going, right? So let's do this. Let's go ahead and add that in. And by the way, did you guys notice anything else with the indicators? Indicators. What is the TTM showing? Compression here towards the end of the possible flag pattern. I'm seeing red. We're getting that combination, Keltner's and the Bollinger Bands. That compression range on standard deviations and ATRs. So we've got that. Let's go ahead and pop that in real quick, and we'll finish it up on that. Again, it's an expensive stock. So some people might be saying, Mike, this is the one we should have done the short put vertical on. Folks, knock yourselves out. Throw in that paper trade in there. You can do that very easily if you wanted to follow it in that format, into a paper trade as well, in terms of a short put vertical, But this is one we already got some of the signals we're looking for. I should say some of the signals we look for on the bounce trade anyway. So there's your 50. I'm going to go ahead and just put, I tabbed on through. We'll pull this up at the top. There you go. It is not a small purchase, but remember the potential exit level we're looking at if it trades below the low of the prior day, because we're just looking for a move right up to T1 at this point, the prior resistance level. But let's go through it. There's the cost of the trade. The cost of the trade right there. The buying power effect as it stands right now in this account, about 9700 and change. I'm going to go ahead and send this through, and we'll keep eyes on this. Okay, we hit a couple of these in healthcare. Folks, today, we build on market conditions, the possibility of a rotation into some of the other sectors. Does anybody want this sector grid? I'm just going to send it to you. Get it to you. I'm going to share it in case you want it, because we are just about out of time. So there is the sector grid. All right. Throw it out there, folks. Again, if you find this kind of content useful, really appreciate it if you smash that like button. Lets me know that it was useful for you. Be sure, and by the way, Cam had thrown out here our X handles. Be sure and follow us, Mike Fairburn CS, Cameron May CS. I always want to say Cam May, which I've called him many times, but you got to remember it's Cameron May. And mine's not Michael Fairborn. So mine's the shorter version, his is the longer version. We just make it confusing around here, but that's what we've got. This Brown Buffett says no stop on start. So what we talked about on this, I hadn't thrown a quote unquote stop in. Good question coming through. We'll finish on that. But right here, what we were looking at is a trade below the low of the prior day. So tomorrow, the exit would be there. And I track these, okay, for those kinds of moves. And a lot of times what I'll do, Brown Buffalo, is I'll put in a alert right there. Right click, customize that guy, and we're just going to say, you got to go at or below. And there you go. Okay, folks, on that note, I'm out of time, but have a terrific rest of the day. It's good being here with you. Look forward to future discussions. Take care, everybody.